Hello everyone, thank you for joining me for the summer 2023 market update. I'll be hoping to share some insight on what we're seeing locally in the trenches, as well as what PRD Research, realestate.com.au and Domain have been reporting on in the wider market trends. Kicking off, we are looking at what we have seen over the December, January, and February quarter. There was a noticeable slowdown in the volume of sales this quarter compared to the spring, with around half the volume. Interestingly, this was not due as much due to the decrease in demand, but rather to an undersupply in property across the region and the wider property market across Australia. We did notice slightly fewer numbers through open homes and less aggression from buyers in putting forward offers. However, prices did remain strong. We saw our more traditional slowdown at Christmas and into the new year, with a slowing in the market into the second week of December that flowed through into the new year. The key takeaway was, though, the significant 39% decrease in the number of new listings compared to the same time last year, which is having a large impact on the market. We've also seen lead times for new residential construction trending back towards pre-COVID levels, and I expect we could see a shift in buyer focus from existing dwelling to new construction this year. Rental demand is still very high, with vacancy levels across the Whitsunday and Australia both reporting less than 1%. This is resulting in increased rental prices and therefore better rental yields, another factor keeping property prices for existing dwellings strong. Again, we're seeing shortages of almost all property types across the market locally. A few sales of note from our office over the last 3 months. A street record was achieved in Abel Road for a lovely home built by Mason Construction, fetching $1.025 million. A solid result for owners in Royal Palms, achieving 10% above the most recent comparable sale of a unit of the same stats. A complex record in the Seaforth building in Airlie Beach on Hermitage Drive in a multiple offer situation. And a very successful auction campaign run by Sean Dobbins of our office, where we see the house from Stan's drama Black Snow go to auction with strong bidding and sold under the hammer. And now for the million-dollar question. What should we expect from autumn 2023 and beyond? Personally, I feel the local market is still in a good place for property owners. Indications from southern metro markets that the downturn could be easing, and locally we are seeing demand is still outweighing supply. I expect we'll continue to see a mixture of negative and positive stories in the news, so I do encourage you to get your information as fact and not sensationalized news reporting. Expect some interest rate pain over the short term, but we might start to see some relief, but I'll touch on that more shortly. In terms of prices, I expect we won't see any significant shifts. However, I do feel there is the potential we'll start to see buyers moving away from existing dwellings back towards new build as we see shortened lead times and decreased level of existing dwellings available. One of the key factors that will impact existing property owners as well as those looking to enter the property market are interest rates. We have the revised projection from Westpac below, which shows some short-term pain for mortgage holders, with additional increase expected before plateauing towards the end of this year. Hopefully some relief on the way with once the rising inflation is curbed, we might start to see rates reduction in that early to mid 2024. Given we've already seen 3.25% in increases in the cash rate in under 12 months, the RBA do have a tough road ahead balancing both inflation but also the exposure for homeowners. There we go. It's a wrap. Thank you for joining me for the summer 2023 update. If you have any questions or any thoughts you'd like to discuss, be happy to do so. My contact details are just over here.